Hello everyone. In this video, I'm going to discuss about the Nifty and Bank Nifty outlook for October month. We are on 15th as the date is today, 15th October. We got another 15 days in this month. And what is the likely outlook for both the indexes is what we are going to cover in this video. One of the interesting aspects of this video is that I have purposely ensured that the chart is absolutely free of any indicators, any sort of trend lines, and made it absolutely clean, so that we can start it from the scratch and then see how I am going to look at the chart patterns and then make sense of what's happening in line with what's going on in Israel and Hamas conflict and many other factors that might play in. We are going to discuss all of that in detail. So watch this video till the end. There are a lot of interesting things that you will learn from this video. It's not about just for tomorrow or this week. It holds good for certain levels. Till the levels are broken, the view is going to be valid. So let's get started with Bank Nifty first. We are in a 5 minutes time frame. All right. Uh, you see that there are a series of gap ups and gap downs, and then things have been going on like this for like more than a week now. How do we read this? Now, in a 5 minutes time frame, we will not be able to make much sense of it. So I'm going to just switch it to 15 minutes to see what are the actions that has happened. Clearly, we have come and reached a bottom, and from there is a reversal that has happened, right? And if I switch to 1 hour time frame, we clearly see a massive downside action that has happened. And here you see there is a peak, and here again we had another peak, making it more like a double top of the double top pattern, right? And we are almost at the neckline. What I call as neckline is, look at where the momentum has started. The market was earlier rallying up and then it consolidated, and this is where the next level of rally started to make a new high, right? So I would consider this is where the momentum peaked, and then when it came down, it again retested over here. Again, it retested over here. Again, it retested over here. So I would be looking at these levels as a potential place. Although there are some wicks below, I would ignore that. Rather, I would draw a line where it took most of the reversals from. So this is one place where market has taken a serious reversal. Now in the double top pattern, what you need to be aware of is when it breaks, what can we expect as the target? How do we know? Just choose price bars. Yeah, price range. So from the peak to the neckline, if I calculate, that's about 2,500 points of fall. Right, so I am going to discuss only positional things over here, which can take us to the levels of, say, 41,360. Right, this is a likely target positional. And can we expect it right away? No, not necessarily. Market would be assessing the conditions, how Middle East conflicts are, whether it's going to escalate or it's going to come to some sort of resolution, and how the oil market is going to react, and subsequently the reflections of it in the gold and how US responds, and then how European markets respond. So collectively, it's going to be a global scenario that's going to determine whether we are going to go down or not. But if there is any sort of escalations, then say that the conflict becomes bigger and the nations are getting involved in the war, then this is easy to achieve, right? So I'm saying the possibilities, right? We are here to analyze what are the various things that might happen. Okay, now let me make this green so that we know this is going to be a likely strong support, and this is where the market has peaked. So I will give it a red. Now this is a likely target. And as we have seen, once the rally has started from here, this was the first time it came, and then there was multiple retests that has happened. Again, it went up. Again, it retested twice. Then third time it has retested. Fourth time it has retested. So whenever a support zone has been retested more than 3 times, the support becomes weaker, right? So very likely possibility that once it breaks 43,840, right? 43,840 or probably 800. Let's round it off to 800. Once it breaks that, we might see a terrific downside action. So critical levels to watch out for is 43,800. It should not break. If it breaks, then we are having a very likely scenario for the market to go down almost like 2,500 points. So that's one scenario. Then what are the other odds? Can the market, really go up? It requires really a fresh trigger. There has to be some good news and some sort of, domestic news that should propel and take the market higher. Otherwise, we are seeing a lot of exhaustion in the uh, market. Puts are gaining faster. Call premiums are eroding much faster, showing some sort of tiredness in the market. You can clearly feel that the bulls are getting tired in this market, and every expiry we are seeing how call side is being attacked in terms of its premium. Writers are enjoying the call side writing pretty much. So that's one scenario. Now, what are the other odds? The other odds are there are a few small gaps that's left. Since it's a 1 hour candle, you need to also pay attention to the gaps. There are few gaps over here. Then there are some gaps that got filled, so there is nothing to worry about. And there is a gap over here, and there was a gap, and intraday basis itself it got filled. So market would like to fill up these gaps. When I say gaps, let's draw it and show. So there is this gap that was never filled, right? There is a gap that was never filled, and there is this gap that's not filled. All right, these are going to be one of the attractive uh, places for the market to go and attempt, right? But it's this is almost like 800 points on the upside, which looks absolutely unlikely because any sort of market has made several attempts in the last week. Whenever it tried to reach 700 levels, it got attacked. You can see that whenever it touched 700, it got severe reversals. So breaking 750 itself is big challenge. On top of that, once it clears 750, then we can expect the market to fill this gap. So that is on the upside, right? And these waves are for the rest of the month. So which is quite likely to happen. And I would say, so this color coding can be in green, right? So yeah, mostly until the war situation has been cleared off, or what is the subsequent development that we get to know. Until then, the market would likely to be filling off these gaps. Will make an attempt to move and then be range bound. It would be range bound. If at all there is any direction that I see coming up positionally, it is on the downside. I am on the put side. This is my personal, opinion. You don't have to really take trades on that. I see that it is easy for the market, considering the tiredness and then the exhaustion at 750 levels and a gap to be filled. And this breaking of this is going to attract a serious downside move, right? So this is on the downside. On the upside, there is a serious exhaustion, and then you cannot really have, clearing 44,750 itself is going to be a massive challenge. On top of that, to clear 45K and to trade above is going to be even a bigger challenge. So that's one view that you should keep in mind. All right, let's now study Nifty. Nifty again, has a similar pattern. It has fallen from the peak, and then you see that it has reached a, a bottom and then retraced to some extent, and then it is again coming down. If we have to, just go and switch it to 15 minutes time frame, then we see a lot of actions over here. From the past, it has made a peak over here. Let's put that out. Then where is the maximum pullback that has happened? Let's also go back in time and then draw that. This is one place where the market has really retraced a lot, right? Like once it came here, multiple time it got tested and then rally started. So this is a strong support area, which is around 19,250. This is what I was also mentioning in other videos and in the discussions in the group. At 19,200, you find some strong support. And then at 20,000, that is a lifetime high, and then that will act as a strong resistance because that's where the market started to fall. If we also look at what's happening in terms of interim targets, then you can see that there is a rally, then that got small pullback, it rallied up, and then now we have come back to this level. So this looks like a very strong zone of decision making, right? So when the market went up, it took a support here, again it fell down, and then it got retested multiple times to this level. It went down, again it retested and closed exactly at this level, right? So we are at a very critical juncture. Any side movements are possible, like 300 points on the upside or 500 points move on the downside. Which is more likely, if you ask me? Probably until market is getting a clarity on what is the impact of the global scenario, where they are heading, most likely they would be maintaining in a range bound territory. Probably, I would say, there could be some sort of, this is one area where there is a gap to be filled, probably up to there 19,900, I would say. It might try and go and fill that. Then there is another gap over here. I'm going to just draw it. So these are different gaps that is left to be filled. Maybe here again I will replace it. Can the market go to this level? Absolutely not, unless otherwise there is a fresh domestic, positive news, something that drives a market, converts its wave to bullishness. I don't see it happening. Plus, there is also another level that has to be proved, which is around 850 levels that has to be cleared, 840 to 900. This is another important level that needs to be cleared, and I don't see market, reaching over here. But there is a likely scenario that market might attempt to close this gap. On the other side, there is another gap that's left open over here. You can see this. So this is another zone that is having a gap, and there is a small gap over here as well. Small targets are there to be filled on a daily basis. I don't want to jump into that, but likely scenario is market might be trading between. Maybe I will change the color to show. Maybe it is likely, one of the likely scenarios is that market might trade in this zone till we have a clarity. Whether it's going to be bullish or bearish, that decision will be made in due course of time. Until then, I don't see market, clearing these two extremes. And then once it clears one of the levels, and I am like in Bank Nifty, I'm expecting the market to clear on the downside, because technically it requires a pullback, not because of the global scenario. My view is purely based on technicalities, and when I say technicalities, what is that? What is that drives me to make that comment? Let's look at this. Right, you have a uh, pattern that is formed. This is consider this as the neckline. It has made a peak, came down, and then it has made a peak, and then it has come down. Now, if I consider this as the neckline, uh, and market, going any time below 19,350, I'm expecting a massive downside action. That is positional correction, I would say. How much you can expect? Again, if I have to choose a price range, then bare minimum, even if it is this one, if I consider bare minimum, I am expecting correction of almost another 600 points, dragging it to 18,600 levels. And there are also other chart patterns and things that I have drawn in another study, which clearly indicates that there are more downside moves and actions pending. And from the past also, you can see that the rally is kind of too big. I will show you in days candle. Um, maybe, yeah, here is the thing. You can see that the rally is so strong. It has reached, then retraced all the way back, and then retraced all the way back. It has made another peak. As you see, the peaks are, you know, not increasing significantly. Considering that from this peak, there is a significant peak over here, and there is a significant peak over here, and there is a significant peak. After that, you see, from this peak to this peak, there is a slowdown. So much it has taken to reach here. And from here to here, it took a lot of time, right? And that is the technical aspect of it. So it's going to be very difficult for the market to make a newer high from this point on, unless otherwise many factors come into support and then help the rally to go further higher. And as soon as you see any sort of peaks being made like this, you see any sort of peaks made like this, you see a pullback, and then these pullbacks are getting shorter actually. Meaning, whenever it made a new high, look at the depth of this correction. And when it came here, look at the depth. Again, it went here, look at the depth of it. But here onwards, you see there is a small pullbacks. It's not because the bullish sentiment is so high that it's not coming down pretty fast, right? And if there is any sort of escalation in the Middle East, or something that happens in the Dow Jones or European markets and Asian markets, collectively, it would create a ripple effect. And you can see this length of pullbacks. The bare minimum that I was drawing was from this level to here. If I have to further draw from here to here, then I have a second target from the neckline, which is around 18,420, right? So this is the least that we are talking about. That's the kind of potential breakouts on the downside. On the upside, I am seeing certainly some exhaustions. So for the October month, it's going to be pretty simple. Wait for these levels, right? These yellow boxes. Market would likely be trading in this, and fresh up moves requires a lot of positive news and pumping in from FIIs and DIIs. But as I see that a lot of bearishness is there in the data as well. So I am expecting a downside move, and the downside move can be triggered first by filling up this gap, and then there is a huge zone that has to be tested, which is 19,200 is going to be one critical zone. Once that's broken, we have downside targets opened to the levels of 18,400 levels. So positionally, this is my take on Nifty and Bank Nifty. Also, we have seen it's going to be huge challenge for it to clear 44,700, and once it clears, then it's going to be tested between 45,200, and which is very unlikely. And again, a bearish view I maintain. And then if it breaks 44k to fill the gap, then breaking of 43,800 is going to pull in a massive correction. So keep this in mind, and then trade safe. Have a great week ahead. Thanks.